Good morning, good afternoon, good evening, ladies and gentlemen. Let me welcome you at our FP&A Trends Webinar. My name is Olga Rudakova. I am a FP&A professional, data storytelling trainer, and dashboard design consultant. I am happy to facilitate this event for you tonight. Today's topic is mastering the art and science of value-adding FP&A. And this topic has attracted 400 registrations from 56 different countries. What we can expect tonight? First of all, let's have a look at our agenda. We will speak about our role as a FP&A in managing the company's value. We'll have a look at Ecolab case study and go through 2 practical cases on how we can add value as FP&A teams. Then we will move on to pharma industry case and again see the role of FP&A in strategic decision making. After that, we will move on to the technology section, again with multiple examples on how technology can help us transform the role of FP&A. After that, you can expect conclusions, recommendations, and obviously Q&A session. Don't hesitate to send your question throughout the whole event, starting right now. And it's time for me to introduce our speakers for the evening. Please join me on the camera. And I will start introducing our speakers in the order of speaking. Let me start with you, Bram. Bram Liebart is a FP&A director for Europe at Ecolab. Bram is a finance leader with extensive experience in transformations, project management, and change management. Bram, thank you for joining us tonight.
Yes, thank you very much, and very happy to be here today.
Let me move on to you, Monica. Monica Cantonetti is Executive Director for Finance at Alexion Pharmaceuticals. Monica is a strategic and tactical finance leader with expertise with qualifications in business development, process redesign, and general management. Monica, thank you for being with us tonight.
Thanks for having me, Olga.
And the last speaker for tonight will be Nick Cox. Nick is a Senior Director for Global Product Marketing at OneStream. Nick has a unique 25-year background in audit, accounting, finance, and business software. He's a regular writer and speaker on finance topics. Nick, thank you for joining.
Hello, everyone, and thank you. I'm delighted to be here.
Thank you all. And it's time for me to introduce our technology sponsor for the evening. It is OneStream. Enable confident decision-making with OneStream's intelligent finance platform. Let me introduce FP&A Trends Group to you. You are attending this webinar, so you're already a part of our digital community. But besides that, we have our face-to-face community, which is presented in 30 cities, 16 countries, and 4 continents. More than that, we offer a broad spectrum of education, research, and consulting resources, so check it out as well. What you can expect this evening. It is 1-hour webinar. You can participate actively through our 2 polls. Beside that, you can ask questions to our panelists. Presentation is already available in the handouts section, and you will receive the recording and the presentation after the event itself. Please don't rush to leave. We'll have a brief survey after the session, and your feedback is very valuable to us. It helps us improve. I wanted to start with a couple of introductory slides from myself. Let's stop for a minute and look at how we spend our time as FP&A professionals. Data in this chart is based on FP&A Trends survey from several years. What do we see here? That only around 1/3 of our time we spend on value-adding activities, such as insights generation and driving actions. Even though this time is slightly growing, it's certainly not sufficient. So most of the time, we still devote to non-value-adding activities. We speak a lot at our webinars on how to free our hands to devote this time to value-adding activities. But today we will focus more on what value-adding activity is. We'll look at several examples during our evening, but if I summarize it very briefly, there are 5 key roles that help us add value as FP&A. The first of all, it is understanding our business, understanding its drivers, having this business acumen, really understanding what creates value. Using this knowledge, we can move to the second step and describe this using matrices and models, actually setting up the basis for scenario planning and scenario management. The next step is actually steering, supporting decision making, being active in strategic decision making as well, and we'll certainly look at some examples from that area today. The next role is extracting insights and telling a story, seeing the story behind the numbers, seeing patterns, fluctuations, and anomalies, and sharing it in a meaningful story with the rest of the business. And the last role, which is equally important as the rest, is reporting to the market, to all stakeholders, producing financial statements that provide true and fair view of our business performance. These are briefly our key roles which combined help us drive business value. And that brings us to our practical presentations tonight. We will start with section on business partnering and true business support. Bram Liebart will share with us 2 cases from Ecolab. Bram, it is yours.
Yeah, thank you very much, Olga. And once again, hello to everybody here from a wintry Zurich today. And this is very much related, I think, to the 2 examples I want to share with you today, because I'm sure, and it's definitely true for the chemical industry, it's a very difficult economic environment. So 2 examples from the last 12 months where we worked on growing volume and pricing in a very difficult environment. And what you will see, and what I sort of analyzed as the key to success of these 2 examples, were really the 3 items listed below. One is to act with urgency, so very important in a volatile, uncertain, complex, and ambiguous world. Secondly, to bring a clear story, right? So obviously we all have a lot of data at our disposal, but then how do you bring that story clearly to your leadership team? And then thirdly, a thing I believe in very hard is what you measure is what you get. So obviously once you get the commitment, it's all in the execution and how you deploy it. So on the next slide, I first want to tell you a little bit about Ecolab. I'm not sure everybody knows Ecolab. We are a business to business. So as a consumer, you might not always come across us, even though you could see us in hotels and restaurants, which is a big part of the business. Ecolab is a US stock listed company. It's 100 years young, and it's a leader in water hygiene and infection prevention solutions. We work with many customers, from very big to very small, spread over a lot of different industries, really all over the world, so more than 170 countries, and with a large organization to cover that. So a very big part of the organization is very sales and service oriented. And with that, we are really trying to help the planet as we do for the people, because lots of our businesses support really what I would call sustainability, both from a water point of view. So lots of our solutions focus on reusing, recycling, reducing water, yeah, which is obviously an incredibly important and relevant topic for most of the world, and definitely in Europe as well. And by doing so, we're obviously also helping the climate. And lots of our solutions also help really the food and beverage industries. So this is a big part of our consumer or our customer base, and really helping them to provide high quality and safe food to consumers worldwide. And then also health. So we have, again, a large portfolio of solutions to help consumers and customers in the world focusing on their KPIs. So let's start on the next slide, maybe with the first case study, which I called translating a sales pipeline into P&L. Maybe a short explanation. So as you understood, we're a very commercially focused company. So we manage our customers and our prospects in a very focused way. And of course, it starts by identifying those prospects and then to build a pipeline. So each sales person has a responsibility to manage a certain pipeline to get to a certain target. And then, of course, the trick is to convert your prospects into wins. What we call win here, it's largely defined as when a customer then signs a contract or when we can issue a first invoice with a purchase order. We consider that deal to be won. And so, of course, we like to set clear targets to everybody, track that, and so that we make sure that everybody focuses on a very regular basis. So on a monthly basis, we want to see some conversion and wins. And so one of the things that we saw over the last 12 months, and again, in a difficult environment where volumes are down, is that actually our pipeline was increasing, and also actually what people declared to be won was increasing, but our volume was not increasing or moderately increasing, not in line with what we were seeing. And so obviously that triggered quite a lot of questions, and really then as an FP&A team, we dug into lots of that different data. And one of the key analyses we did is to look at some of the major deals, so really the big deals, and try to understand why is it that we didn't see, the $1 that were declared in period X. Why did we not see it a couple of months later? And so that really brought up quite a lot of issues. And really, we brought that analysis to the lead team. So again, I work for the European business. So in the lead team, you have all of the divisional general managers, the European CEO, European CFO, etc. And so bring that clear story to them and say, look, we don't see the dollars translated. In fact, for every $100 we win, we only see $14 in our P&L. So where is the rest? And so that triggered clearly an action, because obviously that spoke to the salespeople in the room. And then we set up a team to really focus on the internal issues, because obviously there can be external issues, but really focusing on our internal issues, whether those were finance issues, supply chain issues, maybe issues with equipment and the service, maybe issues with contractors. So going into the root cause and trying to solve those, and really driving an accelerated conversion of the won deals. And so I think the learning from this was really for our team to use all the data available, and that includes all the commercial data available, and really looking at that from an FP&A point of view and doing some in-depth analysis. And then secondly, bring that analysis, those clear facts to the table, and bring a clear story, and obviously try to trigger a reaction from the team so that they go and work on it, and that the business sees an impact on the P&L. So that was my first example, really focused on a volume point of view. The second one, I wanted to talk quickly about pricing. And again, I'm sure many of you remember the second half of last year, where we in Europe had a very strong increase in energy prices. Now, as a chemical producer, we were largely impacted by the natural gas increases, and some of our input costs over the span of a couple of weeks, really 2 months, went times 2, went times 3. And so obviously that meant that we had to react quickly. So with the help of the supply chain team, we really showcased what that natural gas price meant for our input costs, and really what it would mean for our gross margin and our profit if we didn't do anything about it. So that was really a clear call to action that we brought to the lead team again. And secondly, we realized that there was really no time to do individual negotiations. Again, in a B2B environment, especially for the bigger contracts, those are individual negotiations, but those take, typically months to result in a price increase. So what we did is we reapplied something we already did for the oil price to the natural gas price. And so depending on the range of the price, so, before the natural gas price was maybe at 30 euros per megawatt hour, we said as of 80 to 150, we're going to give you a certain surcharge on top of your normal price that you paid. And so that really allowed for a very quick implementation of these surcharges. And really it also allowed to link the input costs to the pricing, so that when your COGS are going up, also your pricing is going up in parallel, protecting ultimately your margin and your profit. And that's also a logic that speaks to customers. We were definitely not the only ones in the chemical industry to do this. So again, for me, 3 learnings from this exercise. We clearly demonstrated the urgency together with the help, of our supply chain colleagues by bringing some key insights to the lead team. Unfortunately, there was not much time for a debate, so really we came with a solution. We came with the issue and we came directly with the solution that was not really up for a very large debate, but sometimes that's needed. And then thirdly, again, what you measure is what you get. So really, after that, it's obviously important that you track the implementation. So we had, many pricing and surcharge trackers in place to make sure that all divisions and all customers and all salespeople were applying this mandatory surcharge. So thank you very much for your attention, and I hope these 2 examples were helpful.
Thank you so much, Bram, for your story, for your practical cases, and for truly demonstrating how FP&A can serve as a business partner and work together with commercial department, with supply chain, and with any other department of the business. If you have any questions to Bram, don't hesitate to ask them through Q&A box, ask them now or throughout the whole event. And it's time for me to ask our audience a question. So let me start our first polling question for the evening. I want to ask you, what do you actually consider value adding FP&A? So the question goes like that. What do you consider the most crucial aspect of value adding FP&A? Is it data analysis and forecasting, or is it cost reduction initiatives, maybe strategic decision support, or compliance and reporting? So let's see what our audience tonight considers the most important aspect of value adding FP&A: data analysis and forecasting, cost reduction initiatives, strategic decision support, or compliance and reporting. Most of you have voted, so let me close the poll and let me share the results with you. So what do we see here? Absolute majority of the audience says that strategic decision support is crucial. Another 25% believe that it is data analysis and forecasting, and very few of you have chosen cost reduction or compliance and reporting. Bram, what do you think about this poll? Are you surprised?
Well, no, I very much like the answer. So it's great to see that many people are thinking about the strategic decision support. I fully buy into that, and I try to do the same. And then the basics need to be there, of course, but it's good also to see that few vote for cost reduction, because you can obviously focus on that, but there's a limit to cost reductions, and it's more important obviously to focus on your strategic growth drivers. So good to see the results.
Indeed, fully agree. And actually, we have the next presentation coming up exactly on strategic decision making. But before we get there, let's have a look at short discussion. So that's when I ask all of you to join me here on the camera. And I have a question to all of our panelists. How can finance leaders foster a culture that encourages value-adding FP&A activities? Is it all about culture or about the scale? But let us see. Let me start here with you, Monica. What do you think? How can you as a finance leader foster a culture of value-adding FP&A?
So to add value to the conversation, first of all, I suggest that you need to be very knowledgeable about the business area in which your company is in. So that is going to allow you to have a seat on the table and then to help to develop and sometimes even to shape the strategy overall, providing insight and financial information.
True. Let me move on to you, Nick. What do you think? How can finance leaders foster the right culture?
Thank you. Yes, no, I fully agree with Monica, and I think it is, it's important, the understanding of the business. But I think finance leaders should be encouraging and rewarding the activities that facilitate collaboration between FP&A and the business. And, that's one of those gradual processes, but one that I see the CFO and FP&A leaders should continually reinforce and support. And those value-add relationships can really do more than just providing data. They can really provide analysis that comes back to that understanding the business and really then helps to elevate the conversation.
Indeed. Back to you, Bram. If you have anything to add, what do you think? How can finance leaders foster culture of value adding FP&A?
Yeah, so very much in line with that. I think it's all about business partnering, right? What we had up front in the presentation, which is really having that relationship, which you need to build, so that you can drive, with your data, with your insights, with your story, really an action from your counterparts, so that things are being executed.
Thank you for all these answers and covering all the aspects of value adding FP&A, and that allows us to move to the second part of the evening, to the chapter devoted to scenario planning and strategic decision making. So the second speaker will be Monica Cantonetti, sharing a practical case from pharma industry. Monica, the stage is yours.
Thanks, Olga. Thanks, everyone. And good afternoon, good morning. I'm calling from Boston, and my name is Monica Cantonetti. I've been working in pharmaceutical companies for the majority of my career. And for the one that are not part of this kind of business, pharma life science in general is a highly regulated industry in terms of manufacturing, access to medicine, pricing, and engagement with healthcare professionals, just to mention a few. Because of this regulation that might vary from country to country, one of the most critical decisions is the go-to-market strategy and the related investment and the organizational design entailed with that. There is a need to manage different scenarios most of the time, and the FP&A play a critical role in leading the scenario planning exercise to anticipate multiple alternative futures and eventually support the analysis on how to shape them. In the next slide, I will show the process we follow in a particular situation where the company I was working at the time was planning to expand its footprint in Latin America and deciding what was the optimal go-to-market strategy. So we identify 4 steps to build the scenarios. In the first step is to identify really the variables that here I call uncertainties, and this can be done with stakeholder interview. Then we rank them and select the most critical, the ones that are key. We develop 2 or more scenarios across these 2 variables. You can also develop more than 4 if you have got more opportunity to do so. And for each scenario, we need to identify the major implication along with threats and opportunities. Finally, we need to verify the level of likelihood and preparedness of the organization for each of the scenarios and identify tactics to eventually fill the gaps. Coming back to our case study of the expansion in Latin America, in the next slide, you will see the variable that the team identified. So the driving force on uncertainties, here I just mentioned 5. So the first one is really the product itself, is ability to differentiate from the others, so the indication of the asset. Then we consider the healthcare government budget and the willingness to pay. The healthcare government budget is an indicator based on most of the time on historical data. Then we looked at the penetration competitive products, here already present, but also products that were coming to market, including generics. New payer business model, pricing is very relevant, is highly regulated in pharma industry. So we looked if there were already some predefined pricing model in the country, or there were not really plans from the country itself to identify new payer business model. And finally, the strictness of value assessment for pricing. Some of the countries, they really pay for performance. So if the product hits some specific criteria or outcome, and that's why it was also a critical factor that we looked at. If we move to the next slide, we see how we really build the scenarios. So the two most critical variables that we identify was for the product, the degree of innovation. And you see at the bottom that we move from low to high if the product that were in our portfolio, and we assess one by one, but also product that we were planning to develop, the degree of innovation that we are bringing to the market. And then the other variable that we looked at was the country healthcare spend. So if the country was implying some budget constraint or no budget constraint. And this really is related to the willingness to pay for innovation at country level. So as you can imagine, the ideal scenario was the scenario number 5. And scenario C. But basically, we developed the different assumption for each of the scenarios. And we position all the countries of Latin America across these different scenarios. And we asked ourselves also what we needed to be in place in order to make sure that all the markets were in scenario C. So FP&A in all these activities really played a critical role because to develop the scenario, to understand what was the sales forecast for each of the product, what was also the go-to-market strategy. You can go with the affiliates, and definitely now you go with affiliates in scenario C, where you have got no budget constraints. So basically the country is willing to pay for innovation, but also you place there all the products that they've got very, very high level of innovation, and you plan already to bring to market a product that they can differentiate from the others. So in scenario C, that is really the ideal model, but we developed sales forecast for all the other scenario and thinking about a different go-to-market strategy that could be distribution partner or really license with the other pharmaceutical company in order to develop the access opportunity for the patient who deserve our product. And FP&A played a critical role, in supporting all the assumption, but also provide information regarding the forecast and investment level and organizational design that is entailed with that.
Thank you so much, Monica, for showing us how FP&A can play an active role in strategic decision-making and in scenario management. If you have any questions to Monica, don't hesitate to ask them through the Q&A box. And meanwhile, we can move to our second polling question of the evening. I want to ask you, where do you think your organization needs the most improvement if you want to get to value-adding activities? So to enhance value-adding FP&A, which area would you prioritize for improvement? Is it technology and analytics capabilities? Is it training and development of FP&A teams? Is it streamlining processes and reducing manual work? Or it is aligning FP&A goals with overall business strategy? All of them are important, but which one needs the most improvement in your organization? Technology and analytics capabilities, training and development of FP&A teams, streamlining processes, or aligning FP&A goals with overall strategic objectives. Most of you have voted, so I can close this poll and I can share the results with you. What do we see here? Almost equal distribution, but the majority is actually for aligning FP&A goals with overall business strategy. Another big part of the audience believes that technology and analytics capabilities needs to be improved, and we have the whole next section of the webinar devoted to technology. And then training and development of teams and streamlining processes got equal votes. Monica, what do you think? Are you surprised by the results?
No, not really surprised, because I mean, FP&A is an enabler. So, and of course, they need to really align with the company goals and business strategy. So whatever is the goal has to be aligned with the goal of the organization.
Indeed, indeed. Thank you for your comment, and that allows us to move to the to another panel discussion. So please join me here on the camera, and I want to talk to you about how can FP&A professionals effectively communicate data insights. We have mentioned several times how important this communication, extracting insights is. So how can we do that? And let me start with you here, Nick. What do you think?
Thank you, Olga. Yeah, well, I do see this as about investing in the process, and of course, technology plays a big part. And you know, I think with the latest technology, FP&A teams don't just have to kind of look and mine through data for insights. They can easily present the results in more intuitive and accessible formats. You know, maybe historically, FP&A has often been focused on quick fixes. There's been spreadsheet tools and different you know, disconnected tools that maybe have been needed, and often transferring that to presentation tools. And so now I think that's changing, and you know, you can really, with this sort of unified tools, you can really start to move the needle.
Indeed, indeed. What do you think, Bram? What you can add?
Yeah, no, I agree to that, and I would say then for me the added point here is to really be able to tell a story around that. So use all this data insights and not use too much of your data to make a clear story, so that again it drives your business partners hopefully to an action.
Fully agree here as well. Monica, if you have anything to add, please do so.
No, the only thing that I want to just to add, to ensure that the data that you're bringing and are relevant to the conversation, and you don't lose yourself in a lot of data that maybe they're not relevant. So just bring the right data, the data that are relevant for that specific conversation. That may be different from time to time, but now you need also to understand and adapt.
Indeed, actually, all of your answers together give us absolutely complete picture what we can do to actually be able to communicate these data insights effectively. And that allows us to move to the last presentation of the evening. We are going to speak about technology and the role technology plays in transforming the role of FP&A. Nick Cox will be speaking about it. Nick, it is yours.
Great, thank you, Olga. Well, hello everyone again, and thank you for joining us. I represent OneStream, and I perhaps naturally bring the technology slant. You probably could tell from my responses to the questions, but during the session today, I would like to just start setting the scene with the question, why is technology becoming important to FP&A teams? And according to Gartner there at the bottom, it's all about speed. You know, I think the pace of change keeps accelerating. So on the left dial there, you know, the automation of finance processes through more advanced technologies is now critical to reduce costs, improve productivity, and allow people to use critical thinking and creativity to drive value and profits. You know, in the middle, I think there's real pressure to show growth, and of course, you know, pressure to show growth and profits is a constant. By using technology to uncover inefficiencies, excess costs, and also maximize revenue, finance can really be the key driver of effective change in the organization. And then on the right there, the power of data, this data volume explosion. I'm regularly talking to organizations about being data driven, and many organizations now have a data driven strategy. But we're seeing data levels growing exponentially. And of course, FP&A teams need to leverage technology to process all this and really leverage it for valuable insights. It's really about getting that story from it. So in my next slide, I'll look at some of the barriers that I think exist to technology. And it may be some of the barriers that have been around and continue to be. And I'll start there on the left with talent. I think there has been a perceived lack of expertise. It's true that some of the earlier versions of technologies were harder to use, required expensive skills. This is no longer the case. And the latest technology can be picked up and managed entirely by finance, by the business. Moving on to scale, there's been really concerns over the lack of scale, perhaps based on the limited resources at first, but also many people were unsure how to really systematize this across an organization. And then I moved to trust, and I think many people had concerns that this would create data which is difficult to understand. I think that came up in the comment from Monica there, that data needs to make sense. And there was often a concern that a black box would be created. There'd be this kind of black box sitting in the organization that's hard to access and gives limited insight. And then finally, logistics. I think many early technologies were simply disconnected. Often they were an add-on to existing systems, and data had to be constantly moved about. Really integration had to be used. This is no longer required in a unified system approach. So on my next slide, we'll look at the evolution. And I think the evolution that's taking place in the role of FP&A, and you can probably see, what I would call the maturity level in your organization from picking out some of the things on this chart. But really, what I see leading organizations doing is taking a more proactive and strategic approach on delivering value. Really going from a static back office to more strategic way of operating. And applying more integrated business processes, really aligning, say, more operational and financial planning. And so where this is going is towards transformational finance, much more data-driven organizations, as I mentioned. And where does that take us? Well, really to that right-hand column, which is where we start to see daily and weekly performance information. Being able to surface data more regularly that you can understand and take decisions on faster, but also continuous scenarios, so modeling and planning on a continuous basis, and then really the ability to collaborate across the data very easily, very quickly. And then now it's bolded there, but with the intelligence that, say, AI, artificial intelligence brings, and machine learning, things start to get very real. We can talk about real business agility in this area. So on my next slide, I'm going to just dive into some practical examples. And the first one on the left, I just wanted to talk about is a large grocery retailer. Their challenge was, like many retailers really, to get the right product to the right location at the right time and to align the people. So really very, very important is to get the people planning right for them. They were finding that traditional budgeting and forecasting models were just not capable of this level of accuracy, because it's a huge task. They've got over 1 million product SKUs. So they're using AI, artificial intelligence, machine learning. They now know the amount of sales to expect with a reasonably high level of confidence. They can now plan their purchases and staffing optimally to meet this demand, and they're really seeing that they can maximize their return. And this is helping them to manage their margins by both capitalizing on sales and, of course, managing their expenses better. The middle example I wanted to share is a manufacturer of utility sports vehicles. And their challenge was really around weekly demand supply forecasting. Slightly less products, they have only around 250 products, but there's a lot of components that make up their products. So quite a challenge, particularly around forecasting in a supply constrained market. They're trying to adapt to dynamic business conditions, and they had to do a quick shift from retail demand planning to supply planning, which was virtually impossible with the previous technology. And now using machine learning, they can plan for the shortages of a lot of the items like semiconductors, steel, and other supplies, we've had many sort of global problems around supplies of certain elements. They can understand the impacts that government economic indicators have them when changes are applied. And they can model significant numbers of commodity price fluctuations. They've got huge models that really give them a very accurate view. And then finally, on the right-hand side, I just wanted to talk through another manufacturer, an automotive manufacturer. And the challenge for them was really about getting unbiased and accurate forecasting to reduce over forecasting. They were making a lot of mistakes really in the forecasting, suffering from excess inventory costs, a lot of overtime being paid when they weren't sure it was necessary, premium freight costs because a lot of last-minute decisions to ship things that were costing them dearly, and then other costs that were associated with that. And this is an interesting industry in terms of auto manufacturers as they pivot to electric vehicles. That's quite a challenge for them around demand models. They don't necessarily have a clear picture of those opportunities with consumers that they have in front of them. And so their projected orders process, which they call an EDI release process, has become notoriously inaccurate. And they're really, well, of course, these car manufacturers are trying to do is balance the switch from legacy vehicles to newer electric ones. Now, the value that machine learning can be brought to this is in terms of the projected orders process is quite significant, and we've seen double-digit percentage improvements in the accuracy of the forecasts over and above what they could do on their own with just the human input. So it's really about layering technology on top of what we can do as humans and really then enhancing that process. So the way I would summarize that was it's process transformation helping with their business model transformation, their shift of business. Now, on my next slide, just to reinforce these examples, OneStream conducts a financial decision makers survey each year with a third-party company. Just very quickly wanted to share a few of the results from the most recent survey. We asked some specific questions about the impact that technology is having, and you can see that AI technologies are delivering results around the speed of forecasting and automation of key processes. And then importantly, there at the bottom, that nearly 3/4 of the respondents believe they're able to predict and manage risk better from using AI technologies. So on my next and my final slide, I'm just going to share quickly my key takeaways. And I think I've mentioned data-driven organization a few times, but this is really the direction for most organizations. I think retooling and retaining talent is key, investing to ensure people can really add value in their roles and can then, of course, transform finance productivity. And this is where the real value is. So thank you, and over to you, Olga.
Thank you so much, Nick, for your presentation and for examples showing us how technology can help us solve many issues related, obviously, to operational overload. And it brings us to the last discussion of the evening. What I want to discuss with all of you is how do you determine the right balance between operational tasks and value-adding activities? So how to find this balance? And let me start with you, Bram. What do you think?
Yeah, so it's a question we ask ourselves every day because it is obviously a challenge to create some time to focus on the analysis rather than in creation or checking of the data. So in my mind, the ideal balance is to spend as least as possible time on the, let's say, administrative part of the job so that you can maximize the value adding analysis that you're doing.
True. Monica, what do you think? How to find this balance between operational tasks and value-adding activities?
So the operational task really should be automated as much as possible and really to leverage technology, and coming back to all the conversation, the presentation from Nick. So you can really use data to take strategic decision and support the business to grow and to expand.
True,
so that's why it's a very difficult balance to find unless you've got a very well-developed technology.
Oh, that's certainly true. And Monica has stolen your answer, Nick. What can you add?
Yes, no, I fully, of course, fully agree with Bram and Monica. And I think, yeah, I would just add, I do see this as something which changes, and I'm sure everyone would recognize that it does change throughout time. And you know, because very often FP&A teams are balancing the demands of planning and execution, and sometimes there's last minute requests or there's urgent things that have to be done, and that changes that whole balance. But you know, I do therefore then fully align with Monica and Bram, and I think you know, it does relate to investing in those areas: talent, processes, technology, making the operational tasks easier and faster, so that the expertise that the people bring can really be fully utilized, and you know, they add value then through the analysis and the understanding, the storytelling that we like so much.
Well, thank you so much for this summary. Indeed, talent, processes, and technology can help us actually find this right balance. And with this conclusion, let us move to the key takeaways from the whole event. If you want the audience to remember just one thought, one idea from the whole webinar, what would that be? Monica, let me start with you. What do you consider the key takeaway from this event?
That basically in FP&A we really plays different roles, and most likely, you know, using data to be a strategic partner is the most critical one, and this is where now we should really work together and to connect the different part of the business and leverage our knowledge to and also now have a little bit more ability to communicate and data in a way that is understandable also for other players, other areas of the business.
Right. Nick, if you want the audience to remember one sentence or two sentences, what would they be?
Yeah, I think I would probably reiterate, you know, FP&A is well positioned to really understand the business, connect the dots on most issues, and provide, you know, not just a spreadsheet report, but deeper analysis, using, of course, effective technology that takes into account the real business objectives that they're trying to achieve.
Absolutely. Bram, what can you add? What we should remember?
Yeah, my plea to everyone would be to really think about how to communicate all your insights in really an effective way, in a story that again drives the action so that you see the results of your analysis in the P&L.
Thank you. And on this storytelling note, let us move to the questions from the audience. Thank you all for sending out your questions to our panelists. I've picked some of you to answer right now. We won't have time to answer all the questions, but we will answer the remaining questions in writing. So let me start here with a unique question related to technology. Can you provide examples of successful cross-functional collaboration enabled by technology tools? So if you can give us one or two, maybe.
Sure. I think really there's often been a void between, say, operationally what happens in an organization and finance. You know, there's often, and that's probably been caused by earlier levels of technology, that they were sometimes siloed and not always connected. And so, you know, I think that now we're seeing technology that can really truly bring that together, that you can in one area link what you're doing operationally at a totally different level from back, you know, that links back to finance. And I think we're seeing collaboration therefore across, you know, different departments in organizations that probably would not really have spoken to each other, maybe just, you know, just a few emails and messages. So yeah, you know, I do see that sort of modern technology and communication is really helping.
True. Thank you for that answer. Let me move on to Bram and to question addressed to you. So in practical terms, and I think that's a very difficult question though, in practical terms, how do you create a roadmap for transitioning from transactional FP&A function to the one that adds value? So how to move within FP&A?
Well, first of all, I would ask my stakeholders what they expect of FP&A, right? Then secondly, I would sort of assess where you stand versus that expectation. And then thirdly, of course, it's important that you work with your team, you know, to gauge the enthusiasm and maybe create the vision to get there. And obviously technology, processes, help of the rest of the organization will be important, but obviously you needed to have a motivated team that work against, a vision.
Wow, it sounds like you have done that, Bram. Thank you for this answer. And let us move to question addressed to Monica. So the question goes like that. Can you share practical tips for aligning FP&A processes with the organization's strategic objectives? So really how to put this together. Very often we have strategy, but our processes don't allow us to actually put it into life.
Yeah, I would really echo on what Bram just said, that first of all, we need to ask ourselves what we are trying to achieve. So what is the goal of the company, to understand tactically what are the things that we need to put together in order to be able to achieve, and then align our own goals, the finance goals, to ensure that those strategic objectives are going to be achieved. So it's really ask ourselves where are we going, and make sure that everybody is moving in the same direction.
Right. Thank you for all these answers. I have only one question to all of you, because we have many questions related to skills development, specifically analytical storytelling skills development. So if you want to name one or two crucial skills for value adding FP&A, what we should have as FP&A professionals, and how can we develop them? Bram, let me start with you. What are these crucial skills and how can we develop them?
Yeah, so I spend a lot of time with the team working on it. And I would say for me, one of the best methods to get to sort of the storytelling communication skills I want to see is to have the team presenting and communicating themselves, right? So I like to expose them to the meetings, to the lead team, to any opportunity they have to demonstrate and try, right? And of course, you'll fail sometimes, but that's how you learn.
Well, indeed, we learn through practice. So actually your answer is, in order to develop skill, just do it. And I think that's an amazing piece of advice. Monica, let me move on to you. What skills do you consider crucial for value adding FP&A and how to develop them?
Definitely curiosity is really one of the most critical skills, because you need to learn, as we all agree, about the business area. Sometimes we can work in different industry, and you need to learn the business of the industry which you are. So curiosity for me is critical, but also the willingness to get out from your comfort zone is another one, because at the time which you ask yourself, okay, what this other area of the business is doing, ask question, you need to expose yourself and be open to learn from others.
Wow, yeah, I like both of them. This business acumen, this curiosity certainly helps. Nick, let's move on to you. What are these crucial skills for FP&A team and how can we develop them?
Yeah, no, well, there's lots of things that I would think, but I liked, the thinking out the box, Monica. I think that's, that's important, and because I think creativity actually, whilst creativity is not necessarily something that's always linked to finance, but I do think creativity is important when you look at the storytelling, and then how you can really turn reports and analysis into something that really hits the note, that really people understand, or can interpret very quickly. And so I think creativity is a great skill to expand on, and I think that comes with the environment as well, as Bram mentioned. Really creating an environment where people can try things and have a go.
Right. Thank you for all your answers. So we are on a good track here, knowing where to go and which skills we need on the way to get to value adding FP&A. That brings us to the end of this webinar. What is left for me is to invite our audience to the upcoming events you can expect in the upcoming months. First of all, the one is about real-time and continuous planning. What does it involve? And this one will be happening on November 8th. Another one on November 22nd will be devoted to the road from insights to impact. unveiling the potential of FP&A scenario management. If you are curious in any of these topics, certainly register to those webinars. Besides that, I would like to demonstrate our own FP&A Trends maturity model. It's a self-assessment tool which you can access on our webpage. Just follow the link down this slide, and through this questionnaire, you can actually assess maturity of your own organization. Besides that, let me thank our sponsor for the evening, OneStream. And if you want to connect to us, FP&A Trends Group, there are several ways to do so. So you can choose from our website, our LinkedIn page, our YouTube channel, and obviously Twitter as well. Thank you all for being here tonight with us, for sharing your questions, for your attention. Big thank you to all our panelists for sharing insights with us, practical examples from your organizations. Hope to see all of you soon again. Have a good evening. Bye-bye.
Thank you. Bye-bye.
Thank you.
Thank you.
Thanks, Olga.
Bye.
Thanks, guys.